Balance of payment disequilibrium can be corrected by two ways, either by devaluation of currency or by protection to domestic market. Devaluation of currency or depreciation of in currency. There are two terms, devaluation and depreciation. Devaluation is done by the government and depreciation is automatic. Currency depreciates due to many factors automatically, but devaluation of currency is done by government intentionally. It is a monetary policy tool used by government in line with central bank, that is RBI. What are the positive impacts of devaluation of currency? It increases the exports. If export increases, producer will produce more. There will be increase in foreign exchange reserve and balance of payment deficit will be reduced. And what are negative impacts? If export increases, producer will produce more, but they will not focus on quality of goods. And this is not the long-term solution. This can be done for short-term purpose, but it is not possible for long-term. Next is protection to domestic market. Disequilibrium in balance of payment can be reduced or corrected by way of reducing or removing tariff barrier and non-tariff barriers so that there will be export promotion and import substitute. If export increases and import decreases, the equilibrium in balance of payment will be settled, especially for deficit side. What measures a government can take to correct disequilibrium? So there can be monetary measures, non-monetary measures, and fiscal policy used by government. Monetary policy measures include increasing inflation in the economy, devaluation of currency, depreciation of currency, and exchange control by government. Non-monetary measures include removal of tariff barriers, non-tariff barriers, export promotion, and import substitution, and by way of fiscal policy. How discrepancy in disequilibrium can be solved? This area is called above the line items or autonomous items, which includes balance of current account and balance of capital account, current account and capital account. This is above the line items or autonomous items, and this is called below the line items or accommodating items. So the balance, that is error and omission in balance of payments, will be adjusted from foreign exchange reserve. This is the solution for discrepancy in disequilibrium in balance of payment. So what is discrepancy in disequilibrium? Generally, disequilibrium happens when receipt side is not equal to payment side or inflow is not equal to outflow, or debit side is not equal to credit side. But there are other reasons also, such as error and omission. If any mistake is done at the time of recording the transaction, then there will be error. But when the transaction is not recorded at all, then there will be omission in entry. So this is also reason of disequilibrium. So this is called discrepancy in disequilibrium. So any error and omission in balance of payment, so it is adjusted from foreign exchange reserve account. For example, if this is balance of payment account, and this is foreign exchange reserve account. So if there is any surplus in balance of payment account, it will be deducted from there and will be transferred to foreign exchange reserve account. It will be added to foreign exchange reserve account. Similarly, if there is deficit in balance of payment, so if there is any deficit in balance of payment, then it will be adjusted from foreign exchange reserve account. The balance of payment deficit will be set off by deducting from foreign exchange reserve account. So there will be devaluation in currency. So discrepancy in disequilibrium can be solved by way of foreign exchange reserve account. It will be adjusted to foreign exchange reserve account. So we have covered meaning, importance and components of balance of payment. We have learned old method as well as new method. Old method is horizontal method, new method is vertical method. Balance of payment account includes balance of current account and balance of capital account. Balance of current account includes export, import of goods, export and import of services, unilateral transfer, income on investment received and paid, unilateral receipts and transfer are current account items. Capital account includes foreign investment or investment made in foreign country and lending and borrowing from or to foreign country. Total will be called as balance of payment. Either there will be balance of payment equilibrium or disequilibrium. When receipt is equal to payment, inflow is equal to outflow, credit side is equal to debit side, there will be equilibrium. Two types of equilibrium: static equilibrium and dynamic equilibrium. Balance of payment disequilibrium, when receipt and payment are not equal, inflow and outflow are not equal, or credit side and debit side is not equal, then there will be disequilibrium. There can be two possibilities, either surplus or deficit. If receipt side is more than payment side, there will be surplus. Receipt side is less than payment side, then there will be deficit. But still, there are some discrepancy possible by way of error and omission. So this discrepancy can be solved by way of foreign exchange reserve account.